Hi, I'm Laurie, and as you probably know, my normal function is to talk about English for doing international business, whereas today's clip is dealing with companies going out of business or declaring bankruptcy. I'd like to just start by saying that I'm not a lawyer, and the definitions I'm going to give here are very general and not the legal textbook detailed definitions. But if you are reading material or participating in a meeting where these terms come up, or you need them yourself in order to describe the situation, then I hope you'll find this useful and interesting. So, firstly, a company knows it has problems when it has insolvency issues. That means it's unable to meet its liabilities, such as bills, salaries, and paying off debts when these become due. It's called insolvency. And it's a cash flow problem. Take into account, for example, Lehman Brothers, the American investment bank who declared bankruptcy in 2008, they had over $600 billion of assets on their books, but they just didn't have the cash to manage the day-to-day running of the bank, and so they had to declare bankruptcy. So insolvency is the main issue for the company. At that stage, it may decide to go into administration. This is a formal procedure that protects companies from its creditors while it tries to sort out a strategy to get itself out of this difficult situation. The administrators, by the way, are appointed by the court and are usually a major accounting firm or law office who have the skills and experience to be able to handle these complex business situations. The administrators may try reorganization of the company, whether that's the activities, whether that's changing the management or directors. Another option would be to sell off parts of the company or the company entirely, including its debts, to some other organization that is interested in having that company in its group. So the company would then be part of that larger group. The final option, of course, if nothing else is successful, is to declare bankruptcy. The administrators may request from the court a stay of proceedings. This will protect them from their creditors taking further legal action while they are still trying to sort out the company's strategy in order to solve their debt and cash flow crisis. So this is called a stay of proceedings, and it gives the company breathing space to work and to find a way out or to look for a way out of the situation they are in. Obviously, if none of the above are successful, the company has no choice but to declare bankruptcy, which means that they understand that there is no way they will be able to meet their financial liabilities. And this may start a process of liquidating the assets in order to raise money to pay off as much of the debt as possible, which is why some people say rather than to declare bankruptcy, that the company goes into liquidation, because we are liquidating the assets. So very briefly then, we looked at insolvency, going into administration, a stay of proceedings, and declaring bankruptcy or going into liquidation. I hope you found that useful and interesting, and of course I also hope that you never have to use them for your business. I'll be back again with some more clips soon. Bye for now.